Next is my least favorite pet program, which is talk about AppLovin and Unity. And I'm going to do the thing that I'm terrible at, which is read numbers. Both of these companies reported earnings this month, and it's really a tale of two stories. So for AppLovin, revenue was just over $1 billion, and they increased year over year by nearly 60%, and they increased sequentially quarter over quarter by about 7%. Now, conversely, Unity was hit in this quarter $460 million, which was a year-over-year decrease of 8%, but a sequential increase of 2.3%. So the interesting thing to also note here is the earnings per share. So the earnings per share for AppLovin has just been ratcheting up at a really, really impressive pace. So 67% year-over-year and 8% sequentially from Q4 to Q1. Over the same time period, earnings per share for Unity, which is, by the way, still negative, was 10% year-over-year, so getting slightly more profitable, but worse in quarter over quarter. So from Q4 of last year to Q1 this year, 7% worse. You can see all these numbers here on the screen for those who are watching. And I think it's like this chart kind of says it all. You see one company which is ratcheting up performance in a really, really aggressive way. I mean, basically quarter over quarter, just increasing the revenue generation and increasing their value to the shareholders in terms of earnings per share. Well, you have Unity on the flip side, who is really, really struggling. I have a lot more thoughts here, but any early thoughts, Warren?
Yeah, I had an experience a couple of weeks ago that probably should have hinted me off that AppLovin was going to have a really strong quarter, which is that I came to one of our AppLovin contacts with a global launch that we had, which is normally like the time that ad networks make the most money. And they're basically like, why don't you just come back and talk to us in a couple of months? Like, you guys go ahead and start with other ad networks. When you're sure you're going to be spending long-term, you can come back and talk to us. So they basically turned away launch money for a global launch, which is something I've never seen any ad network do before. And that's, to me, a signal that they're like doing just fine and being really picky with even just like, new engagements and new clients that they're taking on. So that was a pretty wild and bullish signal to me, honestly, for how they're doing. Because if an ad network is desperate for revenue, they're taking any campaign or new launch that they can get for sure. And I would say not even just desperate, just like any day of the week in history for the most part. And, these are all partners of ours. We try to be neutral and, we work with the ad networks that provide the best ROI for our clients in the games that we work on. But there's power struggles. There's seasons where we see stronger performance or better support from one partner than another partner. And on that same note, as valuable a partner as ironSource/Unity is to us, it's been a tough few months for them, to be candid. We've seen, I think there's a lot of growing pains in the merging of Unity and ironSource's ad inventory. There's been just like very large gaps of service, of just being able to get like proper response and account management. And on the Unity side of things, I think they are doing correct by like rolling that into a lot of the ironSource team, which, as we've talked about before, has had way better like account management, customer success skill set. But there's definitely been some growing pains, I think, as they merge those entities. So if I had to do a hot take here, I would predict that this pattern doesn't exist indefinitely. I think Unity had a particularly bad year with the other very public issues that the company was having to deal with, changes of leadership, and trying to do this large merger in a seamless way. I mean, AppLovin is going to find ways to continue to drive profit, like they're masters at that. But I think we'll see Unity's kind of pace of increase start to mirror AppLovin's a little more one-to-one.
Yeah.
What are your thoughts, Sander?
I mean, I think anyone who's listening to this podcast has heard about this, but the runtime fee debacle also happened last year. The John Riccatello, their CEO, stepped down. They laid off 20% of their workforce. They divested from several of the business segments, including their digital twin professional services, and they've made a big effort to streamline the costs. So it's a time of tumult. Now, to be clear, I've talked a lot about this. Anyone who's listening to the podcasts, I think the Unity engine is the most valuable asset in gaming today. I still believe that. Unity is my single largest share, stock holding out of anything ever. And I'm getting fucking murdered on that trade. But I really, long term, I just don't understand. It would be crazy for this company not to be worth more in 5 years. I can't even fathom it. But to that point, I want to show you one of the chart that I pulled, which is, this is market cap over the same time period. And so if you look
scary.
In September 2022, AppLovin, when Unity and ironSource announced their merger, AppLovin also made a bid for Unity during that period. They were about the same market cap. It's $1 billion. They're both in the ballpark of 15 billion, maybe 16 billion. Since then, And for those who are not watching, in Q1 2023, they're both around 16 billion, 17 for AppLovin and 15 for Unity. And then it just completely diverges. They move in completely opposite directions, where AppLovin is now worth $26-ish billion in market cap. And Unity, as of this morning, it's actually even lower than this number. It's like in the 7 billions number. So
to zoom out, and for people who are just listening, we're basically seeing a chart here where it went from like close to a 1-to-1 of the market cap of Unity and AppLovin to, in 1 year, we're now more than a 3-to-1 ratio of AppLovin's market cap to Unity's, which is wild to have that much of a disparity happen in that short of a period of time.
And it's basically a transition. I mean, like the numbers, the absolute number of market cap dollars here are like basically the same. So it's basically just like AppLovin just like stealing their market cap. And I got to look at Unity, and it's like, at what point does someone just buy this? It's $7 billion. It's like, that is, for the asset that they have, it's unfathomable to me that either one, they don't at some point figure this out, which I think they will. But even if it doesn't happen, like there's a floor to this, because at some point this, like AppLovin will step in and buy this. You know, like, I don't know if they have the cash, but like they have a huge backing from like KKR and all these big private equity firms. Like they will just at some point take another run at this. And it's like, I mean, like, don't take a stock position based off that, but that's like a pretty good bet to make at a certain point. So I don't know. It's just wild to me how these have diverged.
What is really mind-blowing, again, is just the speed of how quickly this gap has grown in just the time of 1 year.
Yeah. What do you think about these charts, Warren? Kind of nice, right?
I think they're pretty nice charts. Xander, did you get better at making graphs?
Yeah, I decided to pull this manually. No, the craziest thing is I did this analysis using ChatGPT 4.0. It takes a little while to sort of like query the questions. And like, to be clear, I'm not just like, give me the answer. I'm like, you know, what is the revenue? What is the EPS? What is their margin? So I asked them like a really sophisticated question, but I came back with the data and I sort of was like, all right, extend the data set. So I was workshopping it. And at a certain point I had a pretty good data set and I was like, hey, can you graph this for me? And it just like in 10 seconds, it pooped out a graph. And I was like, well, that's pretty good. And I was like, all right, change this color, do this, do that. I tested out a few variations of the graphs, but in probably 30 to 35 minutes from like starting the conversation to getting these final graphs and analysis, I used ChatGPT 4.0 to produce all this. This was something that like Casey and I would have gone through, pulled all the data manually, charted it. Like this could have taken us hours of research, maybe not hours, but it would take us a long time of research. And now it's like crazy how fast this is. And that's the other reason I'm like, okay, ChatGPT 4.0 is nuts, because like this kind of accelerates the type of analysis we're going to be able to do. If we wanted to now, I'm pretty confident we could do this type of charting for every one of the major companies in like a pretty reasonable amount of time. And it's like this fundamentally changes the way that we can produce content on the podcast, which I think is just fascinating personally. I mean, what do you think, Warren?
Yeah, I mean, the first thing that comes to mind is this a whole nother large job category that's completely at risk moving towards obsolete, which is like data analysts that focused on visualization. You know, I'm self-scrutinizing here. It's like, you know, obviously Uptick does a lot of work on the analytics side, but I think I'm hoping businesses like ours continue to add value of like, you know, driving insights from data and actions from data. But this is kind of the first step of the race, right? You know, which is like, oh yeah, the need to like have a human build a dashboard and build these variations of the dashboard. Yeah, that's gone now. That's no longer something we need humans for. So yeah, again, the pace of evolution of AI, it's such a fascinating time to be alive and watch this happen in real time.
Well, and I think the interesting thing is like, I don't expect like, we're not going to stop. So for podcasts, it's just, we're able to make a better product with a small team at a shorter timeline and be able to do more analysis. And I think that's the really exciting thing. I mean, I don't think like our jobs are a threat. Maybe you tell me, I don't know, we have a review next week, Warren, you tell me my job's threat. But like, I think we're just able to do more with less. We're just to zoom all the way back out and talk about where the games growth podcast. And this is the number one theme we've been harping on, I think, for the last 2 years, which is we are going to be able to do way bigger games that are way bigger scope with way less people. And that to me is super, super, super exciting.
Yeah. It's an arms race. It's an arms race on multiple fronts. It's like everyone just got increased weaponry on how fast and how lean you can do game development, how fast and how lean you can do games growth and analysis, how fast and how lean you can do creative. And to your point, Xander, it's less about like, oh, this person's job is obsolete. Like any business at the end of the day is a collection of humans. And it's like, we're going to see, I think, more deaths of slow to adapt businesses than at any other time in our lifetime. If those businesses can adapt quickly and leverage these technologies in this arms race, the spoils are going to go to them. But I think, yeah, creative destruction, I believe is the term. I think it's going to be an intense period of creative destruction.
Yeah. Let's go to war, baby. All right. That's it.
No. If you are scaling a game and need a team to go to war with you, maybe Uptick can help. You can reach us on our website. It's uptick.com, upptic.com. We do all things to help games grow. And thanks for joining us for another episode of the pod.
Awesome. Talk soon.